let's start now. Please take your seats for the next session on the future of money. We have a fantastic panel, and we're going to kick off now. Matthias Repplinger with Helaba, please come forward. Dr. Jürgen Schaaf von der EZ of the European Central Bank. We have Manuel Klein of DeutscheBank and Jan Oliver Sell von Coinbase.
Haben wir in Ordnung? Kommt da hier noch dazu, ne?
Excellent. Hello everyone. So the idea is, this is a session about CBDC and stablecoins, central bank digital currency. It's not about cryptos, although there will be a little bit about cryptos. But what I'd like to say, just up front, these are fairly ordinary instruments, actually. The only innovation really is that they adopt a new medium. Something like you can think of a bearer instrument, but in the digital space. So what we're trying to do really is we replicate what a banknote can do. If you tender a banknote, the payment is the settlement. While if you think about electronic payments today, there are at least 4 different steps. The discharge of the obligation, clearing, netting, and settlement. So we are trying to collapse everything into one. So you tender the token, the payment is the settlement. That is one of the great advantages that we are trying to exploit here. Blockchain is just really secondary. It's just the best technology to manage these tokens. So don't get overexcited about blockchain, and it's not clear yet whether blockchain really will be the preferred technology. Now, the adoption of these new mediums follows a broader trend of increasing diversification in finance by actors, by business models, and by mediums. So it's really in that sense very consistent with what we observe more globally. Now, a CBDC will just be the same euro or dollar or peso, like what we have today, but in a different medium. The idea really is to allow central bank money to do more what it can do today. That is really the motivation, but every central bank, of course, has its different objectives. And stablecoins are monetary liabilities, very similar to a bank deposit or a money market fund unit. Again, here the idea is, can a token do payment processing more effectively than what monies can do today? Great. So we have a fantastic panel to discuss this and other topics. Let's kick off with a few introductory remarks by each of you. We start with Matthias, please.
Thank you very much for the nice introduction, Ousmène. Hi, my name is Matthias, and I'm the Managing Director of the Helaba Digital, which is the corporate venture arm of the Hessische Landesbank. When I think about the topic, like the future of money, I bring 3 perspectives. On the one hand, it's somebody working in venture capital, looking for technology-enabled business models. The second one is of somebody working in a clearing bank, wondering about the implications for the financial system as a whole of new forms of money, but also a very process-based view of how will settlement, for example, change. The third one is very simple. As a European citizen, I wonder about Europe's competitiveness. When I think about technology-enabled business models, I see potential in the long term, but serious hurdles to adoption in the short term. Payment systems in Europe at the moment are incredibly efficient. I can transact at the cost of 1/100 of a cent in an instant. So use cases involving new forms of money, they often involve sub-cent payments, they involve continuous payment streams, they involve machine-to-machine payments. It's stuff like renting an individual page of a book or watching a few minutes of a movie before returning it. And while those are great, they're unlikely to lead to mainstream adoption and thereby unlikely to change a very established system. If I look at sort of a new form of money that is a bit more established, I find it on open permissionless blockchains in the form of stablecoins, originally invented as a sort of like liquidity source to transact in crypto assets. And my assumption is that the future of money might follow a similar path. So assets will become digitized, and that will create the need for native forms of payment, of settlement. And that's maybe the pathway that the future of money can go. The second perspective, somebody working in a financial institution, in a clearing bank, somebody who watches all innovations with a keen eye, because design choices, yes, it's only a different medium, but will have a large impact potentially on settlement systems, but also on the roles of banks in the financial system as a whole. A third one, a European citizen. I really, really welcome all initiatives coming from Europe, simply because today, if I want to transact in stablecoins, US dollar denominated versions near 100% market share. If I want to pay online, I can't do it in central bank money. And if I do decide to pay online, I'm very reliant on North American payment providers. And I think it would be good for Europe as a whole if these things would become a little bit more European. And yeah, let's discuss.
Good.
So my name is Manuel. I am product manager in the corporate bank of DeutscheBank, focusing on digital means of payment, meaning central bank digital currency, but also how we as a bank could actually leverage the technology to provide more efficient means of payment to our customers, right? And as I'm part of the corporate bank, very much focusing on corporates here. And this has also, thanks for the good introduction, nothing to do with crypto. So I'm not really looking at crypto use cases. So it's much more that, CBDC on the one hand, that's that one strand, so retail CBDC, the digital euro project, how that would affect commercial banks and DeutscheBank in particular, but also on the other hand, wholesale central bank digital currency, which could be a new form of central bank money for capital markets settlement, for interbanks settlement, that could make capital markets potentially more efficiently or more efficient if you had digital assets that need to be settled. And also, for liquidity management of banks in general, this could also be more beneficial. So that is the central bank digital currency side. And then over the last, let's say, 2 to 3 years, also commercial banks have started to look into the adoption of the technology and whether there is an added value in transferring money and processing payments using blockchain technology. So most of the time, we are not talking about public blockchains and permissionless blockchains, as we do want to control the money that we issue, right? So the deposits that we issue as banks, we provide the accounts, we do the KYC, we do the AML, and this for a foreseeable future, I would say, will not change. So therefore, we need control over the money that we issue. And hence, some projects have started to look into adopting blockchain technology, but more of a controlled form of blockchain technology for payments. And you mentioned already a couple of use cases that some corporates start to look into. So more efficient B2B payments, so business-to-business payments, business across different banks, machine-to-machine payments, and so forth. So innovative corporate payments that might need some new form of money that might be processed on a blockchain. So there's a lot of might still, right? So we are, I think, still rather early in this industry to look whether there is an added value of that new technology in managing payments and managing cash for our clients. But this is also what I focus on, right? So impact of CBDC, and looking forward to discuss that in detail, and also how our deposits could be put on a blockchain. Yeah. Handing over to our last colleague.
Yes. Jan Oliver, please.
Hi, I'm Jan Sell. I'm one of the MDs of Coinbase Germany. I guess I'm kind of coming from the other perspective, the crypto world. I began my career at Morgan Stanley, so I know I guess the more traditional side of things. But I've been working in blockchain, crypto since about 2017, 2018. So my heart is more in that part of the world, and I think particularly in crypto, when you're looking at stablecoins, it's really one of the most interesting or more successful use cases that have come out of the kind of blockchain crypto ecosystems in recent years. Specifically, if you look around, total value settled in 2022 via stablecoins was around 7 trillion, which is almost 3 times the total value settled of a MasterCard payment system. Still, a drop in the bucket if you're talking about overall value settled, but an interesting use case nonetheless. And there are a number of other iterations of stablecoin use cases that that I think go beyond what we have and need in Europe, because in Europe we have a very robust payment system. But if you look at sort of remittance services and other FX type processes, there's a high likelihood of deeply reduced costs for the transmission of money, for the FX conversion, and also for secure and stable and I guess censorship-resistant transfer of funds to jurisdictions where it might be more complicated to receive the money. I'll be the crypto side of this conversation.
Yeah, no, very good, very good. So we have of a different perspective. As you have already detected, this is about an ecosystem play, right? It's not interesting to think about stablecoins or CBDC in isolation, but as an ecosystem where we build a token-based new capabilities that hopefully allows us to do things, differently, more efficiently. At least that is the promise. Yeah? So if we reflect on how could these mediums, affect your business going forward. Matthias, if you start with, how do you see if a CBDC were to come, or stablecoins were to play a more prominent role, how could it affect your business?
Yeah, it's a good question. So first off, central bank money for interbank settlement, it's the asset, right? So that's number one. So wholesale CBDC would of course affect settlement processes. What we see right now, though, sort of more in the short term, is also private bank initiatives to emit a commercial bank money token, for example. What we see in that area is like two types of projects. One that try to rely on existing settlement processes, and some that try to come up with completely new settlement processes. In the latter bucket, the assumption is often, hey, a wholesale CBDC exists and we can use it. And we have a very good technical infrastructure underlying the whole thing. And if that were about to come, of course, it would have like quite a big impact. For example, if you think about foreign money transactions, it could be, CBDCs could be a great catalyst for standardization, for example. If we look more at sort of like domestic transfers, I'm a bit more skeptical because of the efficiencies that we see. And this is really sort of somebody coming from a very business-minded point of view. We can do that very efficiently. So my question is really, where's the value at? Where would we really need to innovate? And I think that's why we're also seeing projects that try to incorporate existing settlement mechanisms and add a flavor to it. And that would be my perspective.
No, very good. No, I think when it comes to large value payments, clearly, competing with the large value payment systems we have, Target 2, for example, in the Euro system, that's not the point. We can't compete with these, I would argue. Maybe a few use cases, because I think it's a bit abstract. What is it, Matthias mentioned it already, but what is it where you see the utility of CBDC, maybe, when it comes to, is it in FX? Is it in other large value? We mentioned security settlement, of course, a lot. To drive it home a little bit, why are we considering it? Where are the deficiencies, and why could maybe this help to do it better?
So I think there are different forms of newly emerging monies for different use cases, right? So we mentioned a couple of different forms of money already. So stablecoins, then there was Libra as a medium of exchange, basically for anybody, potentially also for corporates. There's now retail CBDC, rather focusing also on retail use cases for end clients, right? And there's wholesale CBDC for capital markets. And then potentially, if this tokenization thesis holds true, something like tokenized money provided by banks, so tokenized deposits for corporate use cases for B2B use cases, right? So, but I think it is still very early, to be honest, right? So I think there was, as you also mentioned, a big looming threat, let's say, with the Libra project, which shook everybody up, also banks, because ultimately also banks could have been disrupted. Quite similar to stablecoins, how they could disrupt banks as well, because it's a new medium of exchange, it's a new type of money, it's a new form factor that does not exist so far in that way, how you can transact very easily with it, right? But still, I believe, also with stablecoins, we are still a bit early, right? So the use cases of stablecoins as we know them today are, crypto trading. There are DeFi applications where you can use them. There was the CeFi sector, right, which nearly died now over the last year, and you would use some new forms of fiat money on chain, let's say, and I fully agree that they need to be regulated. But still, these use cases are rather niche and very retail driven. There's not a lot of adoption from the institutionalized sector and from the wholesale sector, right? And then there's this idea of the retail CBDC, a digital euro, which is also really focused on retail use cases, not on crypto use cases, so a much wider scope, right? So you wouldn't only use it for crypto transactions or not even use it for crypto transactions, right? But for a very wide approach, and think about any spending that you would do, right? If you go to a supermarket or if you want to transfer money to your colleague or to your mother or friend, you could use a digital euro from the ECB, a retail CBDC, right? And then there's, again, the idea of having blockchain-based capital markets for potentially more efficient settlement and post-settlement systems, where a wholesale CBDC or some form of wholesale settlement asset, right? It could also be a very well-structured stablecoin or money market mutual fund, or even central bank on a financial market, central bank money on a financial market infrastructure. But that also needs to be built, and there's still a thesis about this newly emerging ecosystem, right? I don't think we are there yet, So long story short, I think the use cases still have to emerge. With stablecoins, I think they are quite clear, but rather focused on crypto, right? And the rest, besides the digital euro, when it comes and if it comes, still needs to find its way into the real economy and financial economy.
Very good. Maybe to follow up on the stablecoin. Of course, Coinbase is supporting one of the biggest stablecoins, USDC. Where do you see the use case for this particular stablecoins? And I have to admit, so far it seems to be limited to doing transactions on Coinbase itself rather than serving a broader.
No, I would disagree. I would disagree. Yeah. So USDC has a number of use cases in the crypto world. So I think USDC among the stablecoin, I guess, pool or whatever, you're looking at about 45% of the settlements of DeFi transactions run through stablecoins. But USDC is also widely used for the remittance use case that I was talking about earlier, where in fact you actually have, I think, there was a study somewhere that said something like 1/3 of users in certain high inflation countries, or certain countries where you had, limited access to money supply, had already used stablecoins to make a payment for a product. So that is potentially a very, very large user base, and a user base that is currently underserved by their local economic system. But I also think, I totally agree with Europe's direction in terms of regulation. I think it's crucial that we regulate stablecoins. I think, because of the potential, especially, if stablecoins continue to grow the way they are, the potential for obviously a systemic threat. We had the Terra Luna blow up, which was obviously, I think, shows you how you can do it badly, but I think the regulators in Europe are starting to move things in the right direction to create an ecosystem where you have a trusted form of stablecoin that can also sort of coexist with the CBDCs. I think there's a world where where CBDCs have certain use cases that stablecoins won't make sense for. And I think there's stablecoins that make sense for certain use cases where maybe the CBDC is not not as relevant, perhaps.
Indeed. I think this division of labor, Manuel, that you also mentioned, I think that's actually key. It's not necessarily a universal use case, but there are certain types of use cases where these instruments could be particularly effective. One interesting thing about stablecoins is that despite the crypto winter, most of the bigger one have survived. I think reaffirming that this is a model actually that can work. So I think in that sense, the crypto winter, of course, also served to sort of demonstrate who is robust enough actually to survive a more difficult environment. But if we reflect a little bit on the use case, I'm not sure we still have demonstrated what the use case could be, sort of, at least not for the mainstream public. And I'd like to sort of, ask you again a little bit more, how would this work? We have in Europe, as you know, from March on, the DLT pilot regime, which allows us actually to build these ecosystems, right? And we can build DLT-based financial market infrastructures to do trading of tokenized securities. So we basically have a framework that allows us to sort of go ahead and actually do it in a sandbox type environment. It's not clear to me yet what will be the pickup, but that is an interesting opportunity to see, what is it really that this new tech can do, and maybe that existing technology cannot do today. But if you could reflect a little bit more about this coexistence possibly between CBDC and stablecoins, but also again the use cases where you think we could be seeing something more substantial building up, maybe not in the domestic case, but maybe in the international sort of in an international setting. Any of you who would like to take it first?
So I think when you refer to the DLT pilot regime, but also on international settings, you could go via the traditional financial sector and apply this technology in existing forms of money or in a regulated form, or you could opt out and say, well, the new solutions on public blockchains take over, and then we would use stablecoins, for example, in order to do more efficient FX and so forth, right? I'm not so sure whether it will be the latter, to be honest. So happy to discuss that. So we see a lot of innovation taking place there, but so far there's not been a lot of uptick, right? What we have seen so far, the leading let's say research strain that we see is wholesale central bank digital currencies, right? So where central banks provide a settlement asset for financial institutions to do those transactions more efficiently, either directly in the capital markets to settle, digital securities, for example, as could be possible in the DLT pilot regime, or also by combining wholesale central bank digital currencies and connecting them to do more efficient correspondent banking or cross-border payments transactions, right? And this is where I see rather a lot of movement, right? There's also initiatives from regulated financial institutions that try to leverage this technology, but not in the completely public permissionless way, but rather building a platform where those that should have access can have access, and then leverage new technology to do these transactions more efficiently. And then on the other hand, there's the premise of permissionless networks where everybody can connect to without having to go through an intermediary, for example, and do these transactions themselves. I think the race is still on, but it seems that also all the problems that the CeFi sector had over the last years, there's a huge damage actually happened to this industry, right? And there's a lot of skepticism now, I believe, whether these newly emerging players will actually provide these services in a sound manner, or whether it will actually be the traditional sector leveraging the technology and providing those services. Yeah? So I think that the race is still on. Yeah?
Good.
I can add to that, I think, because I really like that sentence, the race is still on. And this indeed, right? Because the two things that are basically being discussed is on the one hand, a wholesale CBDC for effective international settlements. A clear drawback is huge infrastructure investments. It's alignment problems. It's a very complex thing to achieve, and I think the current system shows that, right? There are inefficiencies the moment you go across Europe. Stablecoins, on the other side, there are also difficulties, right? The first one that comes to mind is simply currently onboarding and offboarding costs. Yes, remittances, that works well, but first I have to get the money on. I need to pay a fee. If my relative wants to actually receive cash, there's also a conversion fee again. So it's also like kind of inefficient at this point. And that's why the race is still on, I would say. And it's very unclear to me which one has the potential to win out for that particular use case.
Look, I wouldn't see it as a race. Like I said, I think I think the two will coexist because I think there's different sections of the market that are better served by different parts of the technology, right? I mean, fundamentally, what we're talking about is a new form of infrastructure, right? To move this particular asset around, right? In this case, cash, right? But I don't think stablecoins are going to form the basis of a much better international settlement system. Where perhaps we don't take 2 days to equity to reach our accounts, right? Maybe there's a better way. That will most likely be something that the CBDCs will be a lot better at. And then you get into the whole programmable money, where I think the whole thing becomes a lot more interesting, especially for the central bank, perhaps to use and manipulate money in a more effective way. Manipulate perhaps is the wrong word, but I mean in the sense of making it using money more effectively, right? Or moving money more effectively. Whereas I think stablecoins, like I said, I think is more, it's much more of a retail product. It's about moving funds in a permissionless way in that kind of ecosystem that we're trying to build on the I guess blockchain side.
I mean, one aspect. I mean, you can comment to what extent the digital euro will make monetary policy more effective, but maybe don't. But one interesting point is this. We should be able to send money as simply as sending a text message. And maybe to illustrate that again, why in the international domain, payment is so complicated, because you have these long payment chains where it goes from one correspondent to the other, you see. The idea to just send money, it's still cheaper and faster. If you want to make a payment in Singapore and you're in London, to put your suitcase full of, pound banknotes, jump on a plane, fly 9 hours to Singapore, go to the person you want to pay, and, give the person the money, that he wants. So that is today. So DHL sends a parcel faster than your payment. I mean that it shouldn't be like this. So there is scope, to do things better, and I think that's a little bit where I thought Libra did a good job in sort of reminding us of the deficiencies. So in part it's about addressing the deficiencies, but in part it's also about reinventing the processes, of doing payments in the first place. Unfortunately, I've been severely reminded that I need to be on time, so we only have 2 minutes left. So I'd like to ask you just a final thought, starting with Matthias, a final thought about the session, what the key message you would like the audience to take home with.
Yeah, so the key message. So there will be new forms of money. They will gain significant traction, but we need to figure out why.
Very good. Why don't we go, Jan?
I guess my key message is that I think stablecoins are here to stay. I think they providing a very interesting and new form. Like you said, new form of money. I also don't think that they will necessarily compete with CBDCs. I think that there's a world where they will coexist and where we'll have different use cases for each different form of this new form of money.
Yeah, also on the use cases, so I think the use cases still need to be found out, and where each form of money will actually play the biggest role. When the digital euro comes, I think it clearly has its use cases. With stablecoins, I think we need to see whether we will actually see mass adoption outside of the crypto ecosystem, or if existing payment systems will become more efficient. So yeah, fully agree. The use cases they are distinct, and we will see which form of money will actually lead to success. Yeah.
Good, very good. And in fact, we need to remember that we have a continuum of monies, right? We have many monies. Most monies we use are private monies because there are claims on the banking system. So the innovation with stablecoins is not that they are private. The innovation is the medium. Thank you very much. Unfortunately, we are on time. We have to break. There is a short break, I understand now. But many thanks for your attention and for the time you spent with us. Thank you very much to the panelists.